Fannie Mae, Freddie Mac, they will not be able to repay all of the nearly $85 billion they received in government aid. That's the conclusion of the company's chief regulator. Now, Bloomberg's Peter Cook is standing by in D.C. with James Lockhart, the director of the Federal Housing Finance Agency. Right, Peter?
Gigi, thanks very much. James Lockhart, he made those comments earlier today here in Washington. He's with me now here in our Washington studios to offer more on the outlook for Fannie Mae and Freddie Mac. Thank you for the time. Appreciate you joining us here on Bloomberg. And the message today, as we reported here on Bloomberg, if taxpayers thought they were going to get their money back, this $85 billion, all of that money, it's not likely to happen.
Well, they may get some of their money back, but it's very unlikely to get the $85 billion back at this point. I mean, the problem was, as we talked over many times, Peter, that these companies were allowed legally to leverage themselves at 100 to 1. And when we have the kind of housing market we had, they're going to have losses that exceed their capital several-fold. And it just means that they're going to work their way through this, and they're going to help stabilize the mortgage market. But unfortunately, I guess we have to look at it as an investment by the taxpayer to stabilize the mortgage market.
An investment by the taxpayer, an investment by the taxpayer that's going to have to grow as well. Are these companies going to have to come back to the Treasury?
Well, the way the senior preferred works is they're $200 billion each, and in total they've drawn about $85 billion. Each quarter, if they lose money, they come back and ask for more money. They'll be putting out numbers in a week or so, and at that point we'll be able to say.
What about the future? People have talked about perhaps signs of a bottom in the housing market, signs, glimmers of hope out there. What do those glimmers of hope mean to Fannie Mae and Freddie Mac going forward? How soon do you think these two companies, if ever, could return to profitability?
Well, they have $5.4 trillion of mortgages. So as the mortgage market stabilizes, and we're seeing house prices maybe bottoming, we're seeing sales go up, there are glimmers out there. If the mortgage market stabilizes, it will certainly reduce their expected losses significantly. When they return to profitability, it's really hard to predict. Their this year business is profitable. The problem is the business they put in on 2005 to 2007, and that really depend a lot on the success of the mortgage modification program, the home affordable plan for modifications and refinancings. And they are extremely active in that program at this point. I think
you're satisfied with their performance on that score?
Well, they're very reliant on servicers that services the mortgages. They don't do it directly. They rely on the servicers. And the servicers have been stretched thin. The servicers have to add people. They have to work quicker. But we're making progress. We're starting to ramp up. 200,000 are in trial modifications now. Fannie and Freddie have done over 50,000 refinancings. So we're starting to see a pickup, and we're hopeful over the next several months that we'll start to have another several hundred thousand.
In your speech today, you also talked about the future for these two government-sponsored enterprises. There have been a lot of ideas on the table. You outlined a couple of them today. Do you have your own view at this point as to what form they should take in the future and how they should be regulated?
Well, I have my own views, but I haven't shared them very widely.
Feel free.
The key thing is we have to figure out how we want the mortgage market to work in the future. We had a big problem in the last couple of years. We need to restore the market. We need to figure out a safer way if we're going to continue to have Fannie and Freddie, for them to operate. As I said in my speech, nationalization is an option. It's not an option I would believe in. An improved GSE might work, but will have to be carefully structured, or a private sector alternative could also be work. But the key thing is we need to keep the secondary mortgage market in this country flowing.
All right, James Lockhart is the director of the Federal Housing Finance Agency. Got to leave our discussion there. Thanks for the time. Appreciate it.
Thank you,
Gigi,
Peter.
We'll send it back to you in New York.
All right, Peter Cook, thank you.